Hello and welcome to the first video of the Premium Finance series. Today we will be going over an intro of what premium finance is and answering this question here. Can you use other people's money to create a tax-free growing asset to aid in retirement? Well, let's talk about that. First things first, I think we need to understand Finance 101. When do we most typically finance something? And that is typically with a home or a car, right? And you can make fun of my drawings there. I know they're not the best. But the reason we finance is because we know that we can borrow other people's money anywhere from 3 to 6% typically, rather than dipping into our own bucket of money that may be growing anywhere from 10 to 12%, our more high-performing assets, if you will. And like I said, the reason we do this is to not use those funds because we know that we can leverage other people's money to not use our cash outright while it continues to grow, right? Because if you have these assets growing faster than the interest rate on your loan, then you're making the right financial decision, right? Here, we will have a full video to go over the pros and cons as well as the risk involved. But I think one thing that I do want to cover today is the importance of this being structured well. Now, premium finance is a strategy that uses life insurance, which comes with a commission. So there's an incentive for agents to boost their own commission and make this strategy ineffective to benefit them, right? And if you haven't had an annual review and you currently have a policy, we'd love to walk through that with you. There are a few things that we would need to do that. And if you'd like to contact us to go through that, we'd absolutely love to help. Another thing is just making sure that you are doing whatever you have in your power to make sure that is structured well, getting it verified, as well as making sure the agent has your best interest in heart. I think that is something that does happen where the agent will take a big commission, and then later down the road, the client will realize that it was a poorly designed product. So we'd be happy to review anything there for you. Just let us know, and we'd love to get in contact with you. There is obviously risk involved. We'll have a full video for that, like I said, and then obviously reviewing the pros and cons of this strategy. Now here, premium finance, we just want to touch real quickly on the what, the why, the how, and the who, right? So the what, like I said, it is a life insurance strategy. Ultimately, it will come with a death benefit, and you are using the bank's money to pay those premiums while you are just paying a small chunk and or just the interest, right? The reason you do this, why, and you're using other people's money to get that growth, and you're able to take tax-free distributions and loans from that policy to either aid in retirement or, if you're high enough net worth, pay your estate tax. There are quite a few things that you can use this for. How? It's a simple application and setup. We would obviously need to know more about your financial picture to get something specific set up for you. And then who, like I said, this is for high net worth individuals. You do have to get approved on this bank loan. So typically anywhere from 2.5 million to 10 million plus to be able to do this strategy. If you are lower net worth than that, there are a few other options where you can use something similar. And like I said, we'd be willing to work with you on that. Here, one thing I wanted to touch on with that growth, you're using a compounding rate inside of a tax-free policy rather than just a simple interest payment, right? And that's what most normal life insurance is. It's just a simple interest payment. You're funding it yourself, where if you're able to use other people's money and outpace the growth and the interest rate of your loan, you're going to be a lot more well off. And that accumulation value of the policy itself is going to grow at a much faster pace and allow for more cash in your pocket later on. So just to recap, I think one thing to keep in mind going forward and watching the rest of this series is the importance of it being structured well. Like I said, there are a lot of people out there that may have poorly structured policies and just need some help with that. So we'd be happy to review anything with you. If you have any other questions as far as the intro goes, they may be answered in future videos, or feel free to comment them or reach out to us. But this is just our simple intro to that, and we'd be happy to help going forward. Thanks. Bye-bye.